Guys, you better be ready because this week coming up in the stock market's going to be massive. We have a lot to go over in this video. Earnings coming up, charts I'm looking at, EPS, revenue estimates, all that good stuff. But before we do that, don't forget to get your free money from Moomoo, the sponsor of today's video. All you guys have to do is go down below, open up your account, fund it with at least $100. You get 5 stocks, each up to $2,000 right off the bat, and fund your account at least $1,000. You get 10 more stocks, totaling 15 stocks, and fund your account at least $5,000 on top of those 15 stocks. You also get a free share of either Tesla stock or Google, which, guys, this deal is unbelievable, so take advantage of it. Link down below. And of course, full disclosure, that is an affiliate link. It helps out the channel. And with that being said, guys, cheers. Let's dive right into the video. So the first stock I want to go over, and mind you, the markets have been going up like crazy. SPY, the triple Q, which is the NASDAQ. You guys probably know that. So we're not going to get too deep into that in this video. But the first stock I want to go over, which all these companies we're going to talk about today are reporting earnings this upcoming week, is Bank of America, ticker symbol BAC. Let me pull it up and show you guys. This chart is not looking so pretty at first glance, guys. It's looking like the bears are 100% in control, and well, they are. I mean, are they not? I mean, you guys can see we're clearly making lower highs over the past couple of months, and now that I'm looking at this, this is a textbook descending triangle on the 4-hour chart, which obviously you guys should know is not a good sign at all for the bulls. But over the past couple of weeks, you could argue, yes, we're slightly above the moving averages on this 4-hour chart. We have a golden cross, which is great, but with earnings coming up, guys, on the 18th in the morning, which is on Tuesday morning, and mind you, this thing fell pretty aggressively on Friday. This could not be the best setup. I don't know. I mean, this thing could dump further for all we know. So again, earnings are coming up on the 18th. Let me actually pull up the live news tab, or not the live news tab, the Safari tab. Here we go, guys. Bear with me. Smash that like button. I appreciate you all as always. So this right here are, these are the estimates for Bank of America. So, based on 21 analysts, average estimates 84 cents on revenue, low estimate is 76 cents, high estimate is 89 cents, and a year ago they did 73 cents. So, if they do the average 84 cents, that will be up year over year on EPS, which is not bad. And coming down here on revenue, guys, we can see based on 9 analysts, average revenue 25 billion roughly, low 24.29, high 25.83, which a year ago they did 22.79, and that's up around 10%. It's projected to be up around 10% year over year. So not bad there for Bank of America, guys. Let me pull up some other tickers that I'm looking at here coming into this week. Another big one that I'm looking at, which you guys should probably keep on the watch list as well, is Charles Schwab, SCHW. So last week, you guys probably saw we had Citigroup, JP Morgan, Wells Fargo. Now we have some other big financial institutions. Last week we had BlackRock. What else? State Street, right? And probably some other ones that I'm forgetting. Morgan Stanley's this upcoming week. This week, right? So we have SCHW, Charles Schwab, which got hit aggressively after the regional banks ended up, collapsing a couple months ago. You guys probably remember that, right? Who doesn't remember that at this point? So SCHW got hit from $80 down to $44. We're talking a drop of 50% almost. And since that point, it's slowly been recovering, right? We're above the moving averages. We actually have an inverse head and shoulders here. Let me show you guys this. We have an inverse head and shoulders on the 4-hour chart. You guys probably see that, right? Boom, there we go. And, it's slowly starting to crawl out of the hole, but then again, it's still down a crap ton. Mind you guys, it's still down 32% from the recent high, which is massive. So let me actually pull this one up on the live, or not the live news tab. I keep freaking saying that, guys. Let me pull this up on Yahoo Finance so we can see exactly what we're looking at here for SCHW, which again is the Charles Schwab Corporation. That is the official name of the company. Mind you, $106 billion market cap. Big company here that we're talking about, guys. So based on 16 analysts, they're looking to do an average EPS of 71 cents, low estimate 64, and the high estimate is 77 cents. And last year, guys, they did, you guys can see right here, 97 cents in EPS. So year over year, they are down on EPS. Whether they report the high, the low, the average, they're going to be down year over year. And on revenue, you guys can see here on 11 analysts, we can see average revenue 4.61 billion, low estimate 4.57, high is 4.7, and a year ago they did 5.09 billion. So they're going to be down year over year, projected around 9-10% for Charles Schwab. And the next one, we might as well just jump right into the next one here that I'm looking at, which is on Wednesday. We have Goldman Sachs. Let me actually pull this up here and do a quick analysis on the earnings estimates before we actually take a look at the charts. We can see here Goldman Sachs is looking to do EPS of 318 on average, and a year ago they did 773. So that's going to be declining pretty much 50% plus year over year. And sales, they did last year 11.86 billion, but now that on average they're looking to do 10.84. That's going to be a drop roughly of 8-9, close to 10% year over year. So not the best look there for I was going to say JP Morgan, not JP Morgan, guys. We're talking about Goldman Sachs. Not the best look there for Goldman Sachs. And let me actually pull up their chart. I haven't looked at it personally in a while. Yeah, like I could have guessed, right? This thing is downtrending, very similar to a lot of the other banks out there. This one's been making lower highs for months. Actually, before we got news of the regional bank crisis, all that went down back in March, which we're not going to get into in this video. And we are rallying a little bit into earnings, which is nice. I mean, it's not breaking out by any means, but it is rallying from 311 up to about 330 where we are now. But for a complete reversal, guys, this thing's going to have to break the mid 300s. Let me actually set my alert now at 350. Mark is at or above, which you can see that was the high from the middle of June, also from back in April heading into May. So if we break 350, Goldman Sachs could be breaking out, but I'm not getting too excited, guys, as we're not getting any signs of that reversal quite yet. So of course we have Tesla on Wednesday as well. We've covered this stock time and time again here on this channel, guys, which make sure to subscribe. It's completely free. We're almost at 30,000 subs, guys. We're almost there. So Tesla right now is in an ascending triangle, which you guys know if you've been watching my channel, especially these past couple of days, right? We can see higher lows have been made, but at the same time, we have clear resistance at 285, 290, more like 285, which we are slowly starting. We tried to, at least on Friday, slowly start to break out, and then we ended up closing at 283. So let's see if Tesla could fully break above 285, right? 286 into the 290s. That's where I think we could fully start breaking out. And you guys know how Tesla stock is, right? Very hypey, right? Very, very hypey. And we have earnings coming up on Wednesday, guys, which is usually when a lot of bulls rally behind it, depending on what the expectations are for earnings, which in this case, I feel like, we're getting some bullish momentum before earnings. I don't know about you guys, but that's what I'm thinking. Let me know your thoughts in the comments. And let me actually pull this up for you right here. These are the estimates for Tesla, based on 24 analysts, average EPS of 81 cents, and average revenue of, 24.53 billion, which last year they did, get ready for this, guys, 16.93 billion. So they're going to be growing sales 40 to 50%, no doubt, year over year. And EPS a year ago was 76 cents, right? So that's going to be looking good if they do the 81 cent average, which is totally possible here for Tesla. So the next stock I want to go over, which is another big one for this week. Everybody should be watching it. I'm watching it. You guys are probably watching it. It is Netflix, ticker symbol NFLX. They're reporting on Wednesday after the bell, and this is actually selling off a little bit as of Friday. It went down from 461 to about 441. That was a drop of $20, roughly 4%, and it's right above the 50 SMA right now, which, it's been holding that for the past couple of weeks. But I'm thinking if we fall through that, this could start going low 400s, maybe down to 415, 420. That would be a very, that's a likely spot that I think Netflix could go to, especially if earnings are not that great. And mind you, there's a lot of green priced in here, guys. If these earnings are not spectacular, my mind's still on Tesla, guys. Netflix could be setting up for a dump. Same thing with Tesla. Let's say they disappoint. Maybe their stock starts dumping down to the mid 200s again. Maybe Netflix starts going down to the, low 400s, high 300s. That is totally possible, and I'm looking at it very closely here on Wednesday. And let me actually pull up Yahoo Finance here on Netflix, and of course they're a massive company. You guys know that, almost a $200 billion market cap as of Friday's close, which is just nutty. So based on 32 analysts, they're looking to do average estimate EPS of 284, which is pretty decent, but a year ago they did 320, so that would be down year over year. And now that I'm looking at this, whether they do the low of 246, the high of 297, or the average of 284, that's going to be under what they did last year. And it makes sense. I mean, they're definitely burning more money. Margins are tightening up a little bit there. That makes sense. A lot of companies are seeing that right now. And based on 32 or 29, I don't know where I got 32, but 29 analysts for revenue, we can see on average 8.28 billion, low of 8.13, high of 8.51, with a year ago them doing under $8 billion in sales. So they're going to be growing a measly 3%, which you guys know for Netflix really is not that much. It's not that much at all. So those are the main ones that I'm looking at on Wednesday. And mind you, we have a couple more on Wednesday, which we're not going to cover in this video. Some of those include USB, which is US Bancorp, IBM, Discover, Las Vegas Sands. But for now, guys, let's cover two other ones that are on Thursday. The first one that's on Thursday that I want to cover with you guys is American Airlines, ticker symbol AAL, which this one sold off a good chunk on Thursday, Friday of last week. It went down about 6%, and it's actually slowly going under the 50 SMA based on Friday's close. And now it's, you could argue if earnings are awful, which earnings are coming out on Thursday, like I said in the morning, this could fill the gap down to $16, maybe right down to that 180 SMA. Is that, out of the cards? I don't think so. That's totally a possibility that you guys have to realize, and that could be a spot where maybe this could end up being a nice dip buy. I'm not telling you guys what to do. I'm not a financial advisor. Please trade at your own risk, but I'm just saying that's the way I'm looking at it right now. And full disclosure, I don't own any of these stocks right now as trades. So please don't just buy or do anything based on this video. I'm not a financial advisor, and you have to realize that you have to trade at your own risk. So AAL is coming up here on Thursday. Big. This stock's been seeing a big move, over the past couple of months. This thing was at $12-13 back in April. Now we're pushing $20. So let me actually pull up the live news. I keep saying live news tab. What's wrong with me here today, guys? What the heck is wrong with me? There we go. AAL on the Yahoo Finance tab, which they probably should sponsor this video, guys. They're not a sponsor of this video, but I just genuinely use Yahoo Finance. It's not my only source, but I use it a lot throughout the day, right? So we can see here, based on 16 analysts, average EPS $1.58 versus last year's 76 cents EPS. So, big move. Pretty much a double up on EPS here for AAL, which is incredible. And when it comes to revenue, guys, not so big of an increase. We can see they're looking to do on average $13.73 billion, or $74 billion rather, excuse me, guys, versus the $13.42 billion last year. That's only growth of around 2 to 3%. Nothing crazy, nothing really worth writing home about. So that's AAL. And the last one that I want to go over, guys, in this video is J&J. Let me pull it up and show you guys these numbers very quickly before we break down the chart. And if you're still here, guys, hit that like button. Make sure to subscribe. I appreciate you all as always. We're almost at 30,000 subs. And did you know that subscribing is free? Some people think you have to pay. No. It's not anything paid. It's completely free. And all the content that I make here on YouTube is free. And I appreciate all of you for watching as always. So J&J, big company. We're talking $415 billion market cap. They're set to report earnings this upcoming Thursday, and based on 17 analysts, average EPS is at $2.62, and on 15 analysts, average revenue, excuse me, guys, is $24.66 billion, up a measly 2.7% projected year over year, which is not bad, but obviously it's not great. And last year they did $2.59 in EPS, which is pretty much right in line with what they're projected to do on average. So don't expect anything crazy EPS and revenue-wise out of J&J. And if I come over here and pull the chart up, let me show you guys. Wait a second. Let me do this right now. We can see this stock is looking, not so great on the charts. We arguably do, I guess we do, have a wedge, lower highs, higher lows being made. But over the past couple of weeks, this thing has gotten demolished from 165 really in the past 2 weeks, from 165, 66 bucks down to about $157. We lost 5%, which really is not that crazy, but for a company like J&J, for a stock like this, it is a pretty big drop, in my opinion, leading into earnings. But this could be setting up for maybe a big move if earnings surprise, because we are heading into earnings more oversold, I would say. So I'm going to set my alert at 165 on J&J, and we'll see where it goes from there. What do you guys think? Let me know your thoughts down below in the comments. And I guess, with that being said, I'm going to wrap up the video. If you enjoyed it, hit the like button, and don't forget to get your free money for Moomoo, guys. Up to 16 stocks, each up to 2,000 bucks. All you guys have to do is use that link down below, open up your account, and fund it with at least 100 bucks. You get 5 stocks right off the bat, and fund your account with at least $1,000. You get 10 more stocks, totaling 15 stocks, each up to 2,000 bucks. And listen to this, guys. Funded with at least $5,000, you also get a free share of either Tesla stock or Google, which, guys, that part of the promo is insane. So use that link down below. And of course, that is an affiliate link. Full disclosure, it does help out the channel. And with that being said, cheers. I'll catch you guys in the next video.